Okay, good afternoon, everyone. This is Nate G. This is a recording on the 15-minute opening range breakout trades using credit spreads on the SPX. And so today, we've obviously, it's towards the end of the day when I'm making this recording, but I'll show you how we make these trades and what the execution is. This is not glamorous trading, but it is a high win rate trade. And in a lot of cases, you're in and out within about an hour, and can go on with your day if you've got other things going on in your life, right? So the first thing we do is we make sure we're on the SPX, and we're looking for the first 15-minute candle of the day. So this is today. We've obviously had a little bit of a dip into the afternoon here as potential conflict in Israel-Iran continues. But the goal here is to watch the open of the SPX, wait for the first 15-minute candle to form. So if we're doing that, let's just pretend we are in the morning here, and that first 15-minute candle has formed. I'm going to come in and put in a line at the low. You can make that red usually, and a line at the high of the candle wick, right? Mark those two first 15 minutes. And then we're going to play a breakout to the upside or a breakout to the low side, and we just let the market just do what it's going to do. So basically, you can see here my low is set at 6005, basically thereabouts, and 6015. So as the first 15-minute candle closes and I mark those lines, I usually switch to a 5-minute candle because that's what I'm going to take my trade on. All right. So if this breaks the 15-minute opening range, we've got our opening range set. If it breaks it to the upside, I'm going to take a put credit spread, right? I'm going to get a credit for taking that put. And generally, unless this is a pretty wide range, I'm going to take a 605 or 6005 and a 6000. I'm going to take a 5 wide spread on the SPX. I'm selling the upper and I'm buying the lower as protection, right? And so that means this is a put credit spread, and that's a bullish trade, okay? So I am trying to capture a move up, right? And or a move sideways and theta decay. Okay. Conversely, if after the first 15-minute opening range and we break to the downside, I'm going to take a call credit spread at roughly 615, 620, right? So I'm selling the 615s, I'm buying back the 620s. That's a call credit spread, and that's a bearish trade. Okay, so I want that to either move further down or go sideways so that it doesn't break this previous high. Now today it did both, so this is kind of a good example. I usually do them 5 wide, right? And so today, where we were, usually I'm looking for about $1.50 in credit, right? That's what I'm looking for, thereabouts, which, because it's a $5 spread, I will have roughly $3.50 in risk, thereabouts, right? Because in total, we want that to equal 5. So if you take one further out, or these spreads get a lot wider, let's say you wanted to take we're going to do a put credit spread at 6 1,000 and 59.95, you're probably only going to get 80 cents, right? Which means you're risking, $4.20 if you let it expire worthless, right? Which we're not going to do. These are all 0 DTE option spreads on the SPX. Okay. So here's what happened today. And I want to keep an eye on the SPX anyway, so there we go. Today, we broke to the upside, right? And we're not looking for, and so I got, hold on, I got to look at what I got today. I got $1.60, right, on this trade to the upside on this opening range break. And generally what I'm looking to do is take profit at half of that. So as soon as that credit spread fills, I'm setting an exit limit order for 80 cents. Right? Because that's what I want. I want to take profit at 80 cents. And then I'm going to watch it. I am not going to set a stop limit order, because with these spreads you can get taken out real easy and it's nowhere close, right? You just have to watch it. The $1.60 is what I got per contract of the spread. That's the $1.60 is the credit that I received. Okay. So I receive a credit of $1.60 that goes into my account, and if this were to just continue moving up really rapidly, if it was a trend up day and I didn't take the profit off, right, then I would get a full $1.60 as long as it closed above 6005. Right? And it all depends on how wide this 15-minute opening range is. Sometimes maybe you're buying something here and here. You can look for $1 in credit if you want. They kind of like to play that by ear, but I'm looking for anything between $1, about $1.50 to $1 in credit. And I'm taking that off. I'm setting a profit target of 50 cents. Of half of that, sorry, 50%. So if I get $1.50, my profit target, because I got a credit, my profit target is taking it off at 75 cents, right? I'm buying it back at 75 cents. And then the stop loss is double the credit, right? So if let's say I got $1 in credit, right? I'm going to take this off at $2 in value. So I have to buy it back at $2. So I've lost $1. I've lost my credit, and then I've lost $1 on top of that. Okay, so I'm trying to take these off at 50% profit from the credit that I got, and then my stop loss is basically 100%. It's double whatever my total value is. Now, on today's, this thing popped up. I almost got to that profit target mark, and then we faded back, and then we came back up here and almost got to the profit target mark, and it looks like it was going to hold this double top. And so I only took this off for a 40-cent win per contract. Okay? I didn't get the full 80. But that's okay. It just didn't feel. I also had to leave for a little while. So I also was just like, okay, this is going to be enough for today. I'm not going to be able to watch this all day. Right? And had I been back in, right, this bounces around. Had I been back in, I could have taken another one on the break of this 15-minute opening range. The opening range holds for the whole day, right? So this one, had I been here and taken the 615, 620 call credit spread, right? This one I would have hit profits, somewhere in here, and we would have been in business. So sometimes you can take this trade twice, Other times it just goes and, like, for instance, what day was it? It's this day. So this day on the SPX, right, the 15-minute opening range breakout is this line, and I'm on the 5 minute, so it's 1, 2, 3 5-minute chart, 5 minutes, right? So this was the opening range breakout on this day, and I also had to leave after I put it on, but I put this thing on, right here. I think I got $1 at the time because this was a little bit wider of a spread, and then this thing just took off, and so I had my my profit target in at 50% of the credit. And then as it was going up, the VOLD was high. It looked like a trend up day. I canceled that order, right? I didn't take my profit, and I just let this ride to the end of the day. And as long as it finishes above, sorry, that's the opening range breakout line. As long as it finishes above, I think I was in the 605, 6,000s, which kind of puts you right here, right? As long as it finishes above this box, I take home that full credit of $1 per contract, right? This is all per contract. So this is how you scale these kinds of trades. Is, let's say you're taking 50 cents per trade, or 60 cents if you're getting $1.20 in credit. It doesn't sound like a lot, on one lot it's a $60 win. But on a 10 lot, it's a $600 win, right? So it's, once you get comfortable with these, you can start scaling these. But the neat part about that is, if you're not looking at your P&L and you're just looking at your price per contract in your order sheets, you could have 10 contracts on, but it's still showing you a mark of, $1.90. So the mental stress and anguish that comes from having a large position on, like 10 or 20 contracts would be a large position. But if you're not staring at your P&L and you're just looking at your, I'm taking this off at 60 cents and I got $1.20, then you're not stressed. It doesn't cause a lot of additional, at least for me, it doesn't, a lot of additional stress of the size of the trade, right? I'm just looking at, what it's worth per credit spread. And so this one, if it looks like you're going to run up all day, take this, you can take it off. Just like, but then you get a day where you get a really whipsaw effect, and, it would have been dangerous to leave it on all day. So you want to take your profits quickly when they're there, and then just scale up. So far, just because I like it that way, Steve, on the 5 wide. You can do 10 wide, you can do 15 wide. But these are 5 wide SPX trades using the opening range breakout. And sometimes you can get 2 in a day. Yeah, Fog, you're absolutely right. Like, I don't recommend doing that unless you clearly have, that's why I use the VOLD here. So if it's clearly showing a trend up day, then, and I, my spread is far enough away, then I'm not too concerned about it. So far, these are about an 85% win rate. So, if you do the math on that, on an 85% win rate, and you slowly scale up as you get comfortable with these, this can be a nice little daily pay strategy. Like I said, it's not glamorous, right? Unless you start scaling up, you're not able to say, oh, I took a big 200% winner. I mean, yeah, it's 100% of the credit. Okay, yeah, you could feasibly say that, but it's just a nice little income earning daily trade that you can make that's pretty easy. It'll be up on YouTube. Yep, it's being recorded, and I'll post it up. Yep, but give me a little bit, after I jump off, because I won't be able to do it right away. Yeah, there is a bit of a tax advantage for trading in the SPX, but talk to your CPA about that and how that would affect you. I don't want to give any kind of tax advice. And so I'll start putting these in here. A lot of times, the 15 minutes opening range gets set, and it doesn't break for another 15, 20 minutes. But I will try and put these in here. There's also, this is kind of interesting. Here, let me get rid of these lines. There's also tons of indicators. This is a pretty simple strategy. It's not like you have to guess when to enter. And one of the reasons I do it on the 5 minute is because what I'm looking for is when the opening range does break, on the 15 minute, I want to take a trade when a candle on the 5 minute closes above or below that 15 minute opening range, right? So let's say that's a 5 minute. So our opening range is here and here, right? I want a full 5 minute candle to close above that range, right? And a lot of times, if you drop to a 1 minute, you can see a break and a reclaim kind of a situation. So that's why I'll watch this more on a 5 minute, because I want to see. I don't want it to just wick up on a 1 minute and feel like that needs to be an entry. Because what you will see, you'll get little wick ups kind of early once the range is set. You want to make sure that that's going to be a sustained move, and you can watch volume to check that and make sure that that move is going to be a little bit more continuous. And then the one big key really is managing your risk. It's very easy to watch one of these where, let's say your risk is, you got $1 credit. So your risk is, roughly $4, right? And then, it gets to that $2 mark, because remember, you got a credit. So when it goes against you, it gets more expensive. Where you would be buying it back for 100, and it's like, well, it might turn here and it might wait, and then you wait a little longer, and then it continues to drift, and then you wait a little longer, and it's like, okay, well, now this thing is a full loss, right? I've got max loss on this, and even at an 85% win rate, if you're only taking $1 or $100 per contract in profit, but every time you lose, it's a $400 per contract loss. It becomes really hard to be profitable, right? So you have to honor those stops. But I don't recommend putting in unless you have to leave. You can do a conditional order, which is a little bit better, but don't just put in a stop limit order. Because these things, because they're spreads, they fluctuate in price kind of all day long, and you might get taken out. Market makers might take you out, and you were never really in danger. All right, does anybody have any questions on that? So break up, you're buying a put credit spread, ideally just at or under the low of the opening range, and then for a break below, you're buying a call credit spread. Sorry, you're selling a call credit spread roughly at or above the opening range breakout. Looking for anywhere from 60 cents to $1.50, somewhere in that range. Yeah, you can do that, KK38. Fog, I mean, it's the same kind of idea. It's just an opening range trade. So you could play the 15-minute opening range break and just buy a call going that way and buy a put going that way. That's totally fine as well. You could buy a call debit spread and a put debit spread. But I like the 0 DTE call credit spread and put credit spreads, just credit spreads in general, because it also gives you the advantage of theta decay. So if it just kind of goes sideways, or it's not really getting you where you want, as long as it doesn't go against you and just kind of go sideways, by the end of the day you're still going to be profitable. Sometimes that you're in them for a lot longer, but generally you're in and out in about an hour. Okay, any other questions before I turn it off? I'm guessing Nate's pretty much ready to come on and just waiting for me to bail out. Nate, are you here? Maybe he's not here yet. Yeah, and that's another great point that I didn't cover. I like the XPX or the XSP because they're cash settled. So if it does go the direction that you want, and you're going to let it expire for full credit, you don't have to take it off. You can just let it expire, and those are cash settled trades, right? But if you do it on the SPY, or you can do this on anything. You can do it on Tesla. You can do it on Apple. You can do it on any one of these things. But you want to close those because you don't want to risk if it's gone against you. You don't want to risk some level of assignment or you forgetting to take it off. Nate's not on vacation yet, but he's going pretty soon. So I'm gonna turn it over just so when he comes back, if he's coming on at 3 as planned, that it's available for him, and I'll try to post this up as soon as I can. Thanks, guys.